part of the purpose of setting up Future Super is context related. It's not just the context we find ourselves with a lack of government action on climate change, but it's in fact the very critical moment we find ourselves in when it comes to the mega projects, the mega coal projects in particular that are being proposed along the Great Barrier Reef coastline. You will have known already and heard already about the Galilee Basin. And thinking about that issue, thinking about those mega mines, took me back to a time when I was at GetUp and involved in the campaign against the Gunns pulp mill. I want to share that story in brief, or really remind us of that story. I'm sure we all know the key parts of it, to draw a link to where we face ourselves now. When campaigners in Tasmania, and particularly local residents, started the campaign against the Gunns pulp mill, they had the view that if they could prove that there were certain species there, that local legislation in Tasmania would be helpful for them and would allow them to stop the Bell Bay pulp mill. That, of course, didn't happen. They then thought that the provisions in the Environmental Protection Biodiversity Conservation Act, the EPBC Act, would be their friend. That didn't happen. While we saw moments where Malcolm Turnbull, who was the Environment Minister at the time, or one of the Environment Ministers that spanned that time, when we saw him every now and then look positive, it was always followed by something negative happening. It was always followed by intervention from John Howard, intervention from other players. And when it felt that all was lost, you might remember that the campaign turned its attention, after all of those environmental approvals were granted, were rushed through, new legislation put through the Parliament, all sorts of what has come now to be known as corrupt activity that the courts have intervened in and that the courts have offered fines for. When that didn't work, campaigners, including campaigners at GetUp and the Wilderness Society and many other organisations, turned their attention to the world of finance, because they knew that the next phase for Gunns as a company and the Bell Bay project was to seek the financing they needed, over $1 billion, to get that project off the ground. And what we saw there was classic corporate campaigning techniques. We saw hundreds and then eventually thousands of people go into the ANZ, which was the bank that looked the most likely to provide some of the debt facilities that Gunns needed. They were leaving the bank, they were complaining to staff, they were selling their shares, they were employees complaining to upper level management. And since that time, I've met with two people who were both in very senior roles, both inside ANZ and in another major bank. And when I asked them the question, why is it that we were successful in stopping the ANZ from financing that pulp mill? Why was it that Mike Smith, who was only a week old into the job when all of this was thrown onto him, quickly, very quickly in the scheme of things, in the scheme of campaigns, came out and ruled out lending to this project? And the answer I got was that it wasn't just that people were leaving. It wasn't just that they were losing customers. It was that those customers were leaving in a noisy way. It was that those customers were letting the staff know why they were leaving. It was that those customers left the staff feeling like they were working for a bank that was irresponsible. And that's the critical thing about divestment, the context we find ourselves in now, the campaign we find ourselves a part of now. The process of switching only counts when we can make it loud, when we can tell other people what we're doing, when we can share the numbers of people, the size of the funds under management that are being shifted out of the fossil fuel industry. Our aim at Future Super, and we're perhaps the only super fund that has this aim, is to get other people to copy what we're doing. We love the idea of other funds divesting from fossil fuels or offering options, and we're working actively behind the scenes all the time to support that. I mentioned earlier that this was a Canberra story, and I wanted to mention briefly the second reason why it's a Canberra story. And that is that having been up and running for 10 weeks, just a few days ago, we tipped over the 1,000 member mark, which is just so exciting. We just didn't expect that there would be so much early demand. Over 1,000 people now who've divested from fossil fuels in their superannuation, probably more who've done it with their own self-managed super. And the exciting thing is that Canberrans, having done the analysis just a few hours ago, have been 10 times more likely to join Future Super than folks in other parts of Australia, 10 times more likely. And so I wanted to say a big thank you to those in the room who've already joined Future Super. We very much appreciate your support. The other reason why it's so exciting to have had your support so early on is that the performance is something we're also really proud of. We're not managing retirement savings on a week-by-week basis. That's not what superannuation is all about. Our product, Future Super, with a balanced growth option, is all about giving people a chance to remove the risks associated with fossil fuels from their investment portfolio. And that means that the product, as you'll see in the product disclosure statement, is really for people who are investing on a 6-year plus time horizon. But saying all of that, it has been a wonderful few months since we launched. The figures as of a couple of days ago show that the ASX 200, which has had a very volatile time, as many of you will know, has gone down by 3.3%, minus 3.3%. And it's dragged down many of the superannuation funds who've got exposure, as we do, to equity markets. But over that same period of time, we've actually helped people grow their superannuation by 2.3% over that same time period, which in the course of just a few months, if you think about that over the course of 12 months, is a really healthy level of growth. And of course, as I mentioned earlier, this isn't about what happens on a day-by-day basis or a week-by-week basis, but isn't it great if you are a customer of Future Super to know that you've performed better in Future Super than you perhaps may have in your other fund, depending on your investment strategy. Todd will mention later on some of the research that the Australian Institute have done, but I just want to highlight one key fact. And that is that now there have been multiple analysis done, including privately by us, but also by global players, by the Australian Institute, by people in the US, that consistently show that you can remove fossil fuels from an investment portfolio without having a significant impact on those returns. And that's something you can achieve right now. Why is that? Because in part there are so many other sectors that we can all invest in. At Future Super, we're what they call a diversified fund, a diversified portfolio. So we're not a renewable energy fund, even though that is something that over time we'll continue to increase our investments in. We're a diversified fund that means that, like many other super funds, we take a thematic approach to the way we invest in Australian equities in the stock market. We don't just invest in the stock market though, we have defensive assets like fixed interests and bonds and cash, things like that. But when we do invest in the stock market, we look for the kinds of themes that will lead to long-term growth. So to give you a sense of what we've been doing over the last 10 or 11 weeks, we're exposed to sectors like the healthcare sector. We think the ageing of the population will drive up and has in the last, even just in the last few months, has driven up the value of a range of healthcare stocks. We think that that aged care, as a related theme to that, is something that we can expose ourselves to in our investments and get positive returns into the future. We're invested in technology stocks, in financial services, in the regional banks. If any of you are following the finance news these days, you may see that the Murray inquiry is about to come up. We think that that will help Bendigo Bank and Suncorp and Bank of Queensland, stocks like this that we own, perform well over the next few weeks, months and into many years. And the reason I share some of those things that might sound a little bit boring is simply to make one point, and that is that there are so many sectors in this country that are so much bigger and so much more powerful, or at least should be so much more powerful in our minds than the fossil fuel industry. And I say that in part because of where we're at. Matt, who's the MC, is one of the leading thinkers in this country, giving us all the figures that prove how small the mining industry really is in this country and how bloated the story is of the mining industry. With a $1.85 trillion superannuation sector, what we can achieve is extraordinary. I really look forward to answering more of your questions tonight. Adam and a number of others from our team are here, so if we don't get to your questions in the Q&A time, please come up to us afterwards. And I really encourage you to think about joining Future Super and divesting your own fossil fuels. If you want to know where your superannuation fund stands at the moment, then there's a great website, superswitch.org.au, put together by 350 and Market Forces. It's a wonderful website that shows that even those funds that call themselves environmental or sustainable or responsible still have just too much exposure to the fossil fuel industry. I'm really confident in what we can achieve over the next few months and the next few years, and really thankful for your time for coming along today. Thank you very much.
Brilliant. Ooh, brilliant. Thank you, Simon, and thank you, friends and not yet friends. I guess I'm here because of two things. One is 3 years of hard work, very hard work, not paid, all volunteer work, writing press releases, annoying decision makers at the ANU, building a petition, having stunts, having meetings, and having meetings with many people who are here. Hi guys, Fossil Free ANU, which is a campaign of the ANU Environment Collective. The other thing is that I am a researcher at the Australia Institute. I've been able to have this kind of serendipitous affair where I can do activism and fight for what I believe in, which is the ANU being a leader on the most pressing issue of our time, and also do research on this as well. I've contributed to one of the first reports in Australia on fossil fuel divestment, carbon proofing your investments, and that's on our website. It's free, as always, and you can check it out there. There's two versions of the report, one for fund managers who did some important work around the legal aspects of fossil fuel divestment for institutional divestors, that's churches, universities, or churches and other religious institutions, universities and trust funds and foundations and so on, and for consumers like yourselves who might be considering where your own money is, and that's of course for most people in a bank and in a super fund. I wanted to mainly talk about the story of the campaign because I'm really proud of it. I love telling the story, and I hope the people who are here who are part of that campaign are also really proud of it, because we've, in a very small way, changed the course of Australian history. So I'm very proud of that and happy to tell that story. But I also wanted to tell a little bit about the research we've done, and I'll try and do that in under 15 minutes. So I moved to Canberra from Sydney around 10 years ago. I was doing an advanced philosophy degree, and I got very lost in some pretty weird books, and didn't treat me very well, didn't treat my mental health very well. And at the same time, I was going to a lot of public seminars at the ANU. It's a leading institution on climate change, politics, economics, cultural aspects, the geopolitical aspects, and that wasn't very good for my mental health either. Actually, scared me shitless. And I remember there was one, I wanted to be an academic, but there was one lecture that I went to, which was by a very dry climatologist, but he was describing his research on what had happened, his understanding of what had happened in the past compared to what was happening now. And it wasn't so much the graphs that terrified me, although they were terrifying, but more the way he took off his glasses during the Q&A session and said, with a kind of, he's welling up in his throat, he said, "I wish that someone could tell me that I was wrong, that 20 years of my career, the research I've been doing was wrong." And as someone who was thinking about a life of academia, that really struck home to me, and it kind of sat with me for a long time. It ended up pushing me into campaigning, into activism, and I got the opportunity to work at GetUp on climate campaigns and other campaigns. I ended up coming back to the ANU and eventually finished my degree. But while I was there, I met a great group of people at the ANU Environment Collective, very critically minded, active students who wanted to make a difference in our community, the ANU, and in the broader debates. And we got contacted by some activists in the Northern Rivers of New South Wales. They had found out that the ANU was one of the top 20 shareholders in a small coal seam gas company called Metgasco. And they were doing some fracking up in the area. And this was in 2011. And they said to us, "Look, we just thought we should let you know that this is happening and you can do what you want with it." And we thought it was outrageous. What on earth is the ANU doing investing in fracking? So we ran a campaign. We did a bit of research, and we sent an extremely maybe over-researched document with lots and lots of footnotes to the Chancellery, and eventually we ran a campaign. We had a gas rig in Union Court made out of milk crates, which was good fun, and eventually we got a commitment to divest $2 million of Metgasco shares. It was a small company, so $2 million was in the top 20 shareholders. This was in 2011. In 2012, Bill McKibben, he had already launched the 350.org organisation, but he wrote a very famous piece in Rolling Stones called Global Warming's Terrifying New Math. And in that he pointed out that the amount of fossil fuel carbon on the books of fossil fuel companies around the world and countries is many times greater. There's some mathematics behind it. The mathematics has changed since then, but the general point is the same. We have just far too much carbon. We can't burn it all. Actually, this has now been confirmed by the Governor of the Bank of England and President Obama's climate envoy. So it's not controversial. It might be controversial in some circles, but it's not, amongst people who can read and do mathematics, it's not controversial. So, and he wrote this article pointing this out and called for a divestment campaign to withdraw the social license of an industry that had become too powerful to regulate. So we saw this happening, and campaigns exploded all over the US on campuses calling for divestment, calling for leadership from institutions that are telling us about the climate crisis and should be leading, not being complicit in it. So we saw this happening. We thought, hey, we've already started this. I mean, we've already started our campaign. We should follow it through. And the way that really got underway was in the beginning of 2013. This is ironic, given that tomorrow the Senate will be voting on watering down freedom of information law. Hopefully it doesn't get passed. But I submitted an FOI request to the ANU asking for information about the ANU's investments in Metgasco. Why were they still holding those shares, and in other fossil fuel companies? Eventually, at first it got knocked back. They claimed there was no public interest in disclosure, which was strange because I was the public and I was very interested. But eventually, and it was also a bit obscene because Gareth Evans is our Chancellor, but he made his name in politics in the early days fighting for FOI legislation. So it looked pretty hypocritical, and he suggested to the Vice Chancellor at a council meeting that he might want to have another look at it. Eventually we got the information, and of course it showed, as we were a bit naive, but we expected that there might not be so much, but of course there was a lot of fossil fuels in the portfolio. It's a 1 billion roughly portfolio, one of the biggest in the country. But not only that, but there was the documents showed that while the university was divesting from Metgasco, and I think by this point they still hadn't completely done it, maybe they had. But while they were doing that, they were actually buying up shares in Santos, which of course is an industry leader, self-described industry leader in coal seam gas. So this was just outrageous. I mean, this was outrageous hypocrisy. And the university, it struck a chord. I mean, of course, it's just hypocritical. So the council and the staff put in place a socially responsible investment policy. It took a long time, but they came to a phrase that they borrowed from the gold standard at Stanford. That was, we will not invest in anything that causes substantial social injury. That was the compromise position. Well, in April this year, Stanford divested from coal. So we thought that should have been obvious what the ANU was supposed to do. Anyway, during this time, we ran a whole bunch of public forums. We were engaging with decision makers. I mean, I don't know how many people here are from the university community, but there isn't actually a lot of engagement between decision makers and the university community, and activism on campus, unfortunately, it's better at ANU than it is in a lot of places, but it's pretty moribund. And I think that we actually managed to earn respect from the decision makers at the ANU by conducting ourselves in a way that was, truthful and sort of resonating to the crisis that we are facing, but then also being respectful about it and caring about what our university stands for. We ran a referendum recently that found that 82% of students supported fossil fuel divestment, and that was a lot of fun. We had two joke candidates. One was Divestman, who was in an orange leotard and had a cape. He actually beat some of the serious candidates. And then we also had a coal baron. Students dig coal, and there was a kind of a rivalry between them throughout the debate. And we got all of the candidates, the serious candidates, signed on, except for one, I think. Signed on, and this really speaks to the fact that this is a point that a Swiss bank, UBS, has pointed out, that it's not really about the power of divestment. It's not really about data. It's about the fact that people who are driving this movement, at least part of it, the students, are going to be the voters and leaders and consumers of the future. And we saw it was an uncontentious issue in that election campaign. Brings me to the recent controversy, which is probably how most of you have heard about the ANU campaign. Well, maybe, I don't know. So in maybe 7 weeks ago, the council decided to operationalise or made a decision based on the process of their divestment policy, socially responsible investment policy, which involved getting some information from an independent consultant on the ethics of their investments and basically screening out the worst guys according to that ranking. And we were totally not prepared for it. We thought that they were going to keep procrastinating, to tell you the truth. But it wouldn't have mattered because we wouldn't have been prepared. No one would have been prepared for what happened next. I did some analysis of the coverage recently. There were 43 stories in the Australian Financial Review. 43 stories that mentioned No, 53. There were 43 about the ANU, but 53 that mentioned the ANU decision. That was more than stories about the Rio Glencore merger and the China coal tariff put together. So the AFR kind of blew a fuse, right? They just went a bit crazy about it, which really shot divestment as an issue right into the national agenda. And of course, it was helped by 6 cabinet ministers, including the Prime Minister weighing in. Thanks, guys, because it gave us coverage that we could not possibly have hoped for. A kind of confluence of events that have given us exposure like we could never have possibly hoped for. And as a result of that, every other day I get an email or a phone call from someone asking how to set up a campaign. And I guess there are kind of 5 steps to that. And I really encourage everyone to think about communities that you belong to. Divestment is not just a consumer thing; it's also something that we can do in communities that we belong to. 5 things. The first thing is to do the research. Where's your community invested in fossil fuels? The second thing is to find your team, find the people that are going to help you push this campaign. The third thing is to start engaging with decision makers, because they might not oppose it, they might want to work with you. The fourth thing is to show community support. It needs to be driven by a small group of people, but you need to be able to demonstrate that your community wants leadership. And the final thing is that you need to be ready to escalate, because we are in an emergency. This is not really negotiable. We need leadership now. So where we find ourselves now is in a situation where the ANU has agreed to pull out of 7 particular companies. 2 of them are fossil fuel companies. There's no guarantee that the money won't go back into the industry. That's the thing that I'm going to be saying to decision makers at the ANU when I get the opportunity. You need to make sure that this money doesn't go back into the industry. The ANU has been overwhelmed with support from people who want it to be a leader on this issue, and I think that they will be concerned if they hear that this $16 million is going to go back into the industry. I've spoken a lot, I guess, about the story, so I'll keep I'll gloss the research quickly. It's all there. You can read about it. You can ask me about it in a second. But I guess the main point is that there's kind of 2 aspects to 2 reasons why you might divest. One is to make a moral statement. You're not going to destroy the industry by taking your own money out or a small institution taking their money out, but it sends a very powerful message. And the response from the mining lobby and the AFR demonstrates that without doubt. Divestment is real, the symbolism is powerful. But it's also a financial strategy. If the world is going to get anywhere near 2 degrees, we need to write off all of these, or large portions of the fossil fuel assets. We don't really understand climate change until we come to terms with that. But it's not really that aspect of it that's driving the financial risk. It's really things like local pollution, especially in China, the absolutely plummeting cost of photovoltaics and storage, which is totally undermining business models around the world. €500 billion of value written off in the EU as a result of renewables, and the entire electricity sector has been downgraded in the United States, and that's happening here as well, and that's why we're seeing such ferocious lobbying. And the final thing is political pressure. Political pressure itself creates risk, and the divestment movement is one of the most powerful ways, I think, at the moment to drive that risk. It's not going to, by itself, create the change that we need, but it's an incredibly powerful lever to get that change underway. And it is the fastest growing divestment movement in history, and I think that should all give us a lot of hope. So, thank you.
All right, thank you, Tom and Simon. So we'll go to questions. Just one thing, so the roving mic is apparently the thing that's setting the speakers off and making it buzz. So we can't use that tonight. So I'll get the speakers to repeat the question that you asked so that everybody can hear. So this is really good in a sense. It means that if you ask a 2-minute question, they'll summarise it into 1 sentence. So if you can keep your questions, not statements, but questions, to being very short, that would be much appreciated.
Simon, what's the difference between your super fund and Australian equity?
Well, the best place to go and look for that difference is here I am forgetting the rules already. The question is, what's the difference between Future Super and Australian Ethical? Obviously one of the leaders, if not the leader, in the ethical investment space. And the differences can be borne out by looking at the Super Switch website. I don't want to sort of say anything negative about another super fund, but the Super Switch website will take you through the exposure to gas, to coal trains. In particular, one of the concerns that we'd love to see them address is the pipeline that is set to carry unconventional gas out of the Kimberley and down WA. So this is the type of exposure that, unless you are deeply concerned about fossil fuels, isn't necessarily something you have a look at. There are many similarities though. So if you say we are fossil fuel free and they and other funds aren't, that doesn't mean that that's where it stops. Future Super, as you can read in the information that's flowing around tonight, also gets rid of, has a zero tolerance approach to a whole range of other areas like old growth logging and tobacco and all the traditional things that you wouldn't want your money going to because of the risks, environmental, social and governance risks associated with those industries. So really the difference is, at the end of the day, we don't invest in fossil fuels, we don't invest in the companies that finance the fossil fuel industry, and we don't invest in the companies who provide material services to that industry. And the reason for that is that we feel that the risks associated with investing in fossil fuels outweigh any possible short-term rewards. And that's not broad political and climate risks, we all know about that. This is economic risks as well.
If we were to stop fossil fuels tomorrow, what would we do? How would we survive?
Do you want to repeat the question?
If we were to completely stop using fossil fuels tomorrow, how would we survive? It's a good question, and our way of life, of course, would not survive. I don't really see the question of fossil fuel divestment as a question of whether we should, the extent to which we should be using various products in the short term. I see it as a question of political power. We've known for decades that this is a crisis. And one of the main things that has stopped action to protect citizens from the impacts of this crisis is the power of the fossil fuel industry. At a time when we know that we need to be rapidly decarbonising our economy, getting to negative emissions, we need to be drawing down carbon, according to the IPCC, by the end of the century. We are still pouring hundreds of billions of dollars a year into fossil fuel infrastructure. That is absolutely insane. And that's because this industry is too powerful. So the way that I see the significance of the symbolism of fossil fuel divestment is as a way to withdraw the social license. It's only to begin to do it, because the process is going to take a while, such that governments can effectively regulate. But as I said, it's not only about political change, it's also about technological change. The risks are very real, and if you look at the graph of costs from photovoltaics, they're just absolutely plummeting. There's a fantastic graph it's been known as the Terradrome graph. No one really knows what this means, but it's a finance expert who shows 150 years of energy costs, and you've got various fossil fuel costs going up and down, and then right at the end of the graph, bang, like a lightning strike, is the cost of solar. And this is rapidly disrupting business models around the world. So whilst it's about social license, it's also about protecting yourself from the financial implications of that, because no one really knows what's going to happen and how fast it's going to happen.
Maybe I'll just very quickly add to that a couple of interesting examples. In Perth, the largest energy retailer lives on the roofs of hundreds of thousands of people, larger than any other form of energy generation, I should have said. In South Australia, just a few months ago, there was a day where more than half of the power of that state came from renewable energy. In Germany and in South Africa, we've seen days where almost, if not all, 100% of the energy has come from renewable energy. In India, in the last 3 years, the price of solar has gone down by 65%. And yet we have the Queensland government announcing in the last few days that they want to spend over $300 million propping up a coal train network that may actually not end up being used, because the economists think that China, and there's growing consensus on this now between the IMF, the World Bank, the OECD, HSBC, Citibank, the list goes on, that China's demand for Australian coal will peak between 2016 and 2019. Now it looks like it'll actually be closer to 2016, if not slightly earlier. So the transition is happening. The question isn't, will it happen tomorrow, but the change is on. And that's why when we went to the lawyers, to the trustees, to say we want to set up a fossil fuel-free super fund, we were allowed to do so because we could prove that we fit what they call the sole purpose test, and that is the sole purpose of superannuation, and that definition of that is adapting, but the sole purpose needs to be to protect and grow the retirement savings for beneficiaries. We were allowed to proceed with the fossil fuel-free portfolio because the risks associated with stranded assets, something that we've touched on but not directly touched on tonight, because the risks that these assets that our retirement savings are holding, the risks that they actually may have significant devaluation is now very real.
Right up at the very back there.
Hi. You mentioned a balanced growth option for future super for those who have a moderate tolerance for risk within the 6+ year period. Do you have a high growth option for people with greater tolerance for risk?
So I'm not going to remember this, am I?
I'll be here.
Thank you. Just to repeat the question, this is about the option that exists, and particularly for younger people, they might have, or people with different circumstances, might have a high appetite for risk in their superannuation. I know when I first started out, I was in the high growth asset class. We have a balanced growth option that is tends to lean more towards growth, so it's 70% in growth stocks like the stock market, listed property, etc., and 30% in conservative assets. It's volatile times on the stock market now, so we felt that, and the asset consultants that we brought in felt that that was the most beneficial way to launch, the most responsible way to launch, but we'll be adding more options as the months go on into next year. For example, the most important thing that we're working on right now in terms of new product development, two things that are worth mentioning off the back of this question. One is a pension option for those people who are in the retirement phase or in the phase where they're transitioning to retirement. We're working actively on that. And if you're interested in that, you can register down at the back there at the Future Super stall there, the table's there. You can register your interest to be the first to hear about that. We're also adding options which we hope to launch very, very shortly for people who self-manage their superannuation. Australia's first fossil fuel-free self-managed super product suite, really, of products for people there, as well as managed funds for those people who have got savings. That product is very near completion as well. And then into the future, we'll look to add more things like very conservative options and very aggressive options. We're meeting right now, we're some of the only people around who are meeting with people in the private equity markets, people in the venture capital space, to say, how would you do fossil fuel-free versions of what you're doing? We're actively out there doing that. We're working with international fund managers to build international products that are fossil fuel-free. We're doing this because we're doing it now because we didn't expect to have such a strong start. The investment managers and the trustees and everybody involved in bringing this product to market now are clearly seeing that there's huge demand that can't be met through one product, and so we're out there innovating every day. I hope that answers your question.
I just wondered if you had made many connections with the boards of some of the big super funds, and whether there's any dialogue there about either their possibility of moving completely or partially and creating some options, because the potential to start leveraging some of the goodwill that probably exists in some of those funds. I imagine they're a bit conflicted with some of the union representation, but maybe both ways, so just interested.
Well, we both have, so do you want to lead off on that? Oh yeah, the question. Well, Tom can say the question.
Have we, or has the movement been engaging with trustees and boards of super funds? I haven't personally, but I know that this issue, like no other, has sparked engagement from members of superannuation. Superannuation for most people, most of the time, is incredibly boring, and if the super industry talked more about what the money was doing and less about fees, and presented what they were doing with their money in a more interesting way, maybe there'd be more engagement. And I think that fossil fuel divestment has really sparked that in a way that has been quite exceptional. So as a result, there were conversations going on amongst very mainstream super funds about how they deal with this. I went to an an asset managers briefing in Sydney recently from a company selling an index that allowed investors to go fossil free without sacrificing returns, and it was utterly compelling, and it was amazing that there weren't more people there. It was a full room, but it was certainly smaller than this. And people were completely engaged with all aspects of the issue in that room, and talking about how their bosses had directed them to come and find out what was going on so they could work out how to do this. I guess so that Simon and other similar options wouldn't steal their customers. There are new products coming online every other day. It's quite incredible. It's a really great movement to be involved in because you get this steady stream of victories. And one thing to keep in mind is that there's a very large range of what gets called divestment. I mean, divestment in a way is great because it's very flexible. You can divest whatever you want for whatever reason you want. But some of the victories, and they have been victories, for example, AMP screening out various coal assets, are very far away from what we're asking the ANU to do and what Simon's fund is doing. They've screened out coal assets with a very high materiality threshold, which means 20% of the revenue is from coal. But if you look at, for example, BHP and Rio Tinto, they have large coal assets, but they wouldn't be captured by that. So it's up to everyone to make their own decision about this, but the fact that the conversation is driving this change, this awareness of carbon risk in the sector, is, I think, the real victory. And someone at the briefing expressed it this way: the divestment movement is educating the finance sector about this colossal risk that it's facing, that John Hewson and also an ex-US Treasury Secretary say could trigger, if we don't manage it properly, could trigger a GFC plus.
And from our perspective at Future Super, yes, we have met with a whole range of people from the industry. Of course, since we've launched, those conversations have been tougher, given that we are taking a very rapid pace of customers away from some of the biggest super funds. Almost everyone who joins Future Super, about 95% so far, it's the first time that they've gone into an ethically invested fund. And we're really proud of that figure. Because that's what this is about, actually giving people the option who haven't thought about it before. But we're also seeing mini victories, if you like, every day as well. We got a leak just recently, for example, about one of the largest super funds in Australia who are having regular meetings now in the diary, scheduled on a weekly basis. How many customers have we lost to Future Super? How many customers have we lost to Future Super? Are we there yet to the point where we need to actually create an option for our customers? For many people, including some of the public sector superannuation funds, they've told campaigners, for example, at 350, that when they lose about 5,000 customers, they'll think to themselves, hey, this is getting very real. There was, in fact, a crisis meeting held 2 weeks after we launched by 7 industry super funds who got together in Melbourne, and again, someone there leaked that information to us as well. So we're very surprised by this, to be honest with you. We're very surprised by it. 1,000 people is very significant, but it's 1,000 people. It's $20 million so far in a $1.85 trillion superannuation sector. And so why are we making a disproportionate impact in the last few months? I think it is because of the fact that it's part of this broader campaign that's happening. It's loud. There's all sorts of organisations talking about it. There's people getting emails via the SuperSwitch website all the time. People get confused. Is this email coming because they've switched their superannuation fund? Is 350.org and the Australian Institute and Future Super, are they all the same thing? Of course we're not, but when you're a fund manager, you don't know what's going on. It feels like a coordinated and aggressive attack. Now we can assure you that it's not. We'd love to find time to meet up with each other more, but I can't even remember the last time we were able to do that. And that's because it's not coordinated, but it is making that disproportionate impact for those reasons. And that's, by the way, just to wrap up on that question, we will do more work, not less, more work to reach out to the boards and trustees of other superannuation funds because, as I mentioned earlier, we are aiming to be the domino, the first domino in a domino effect. That's what it's all about.
I got one here, then one here, then one here.
Two-part question, Simon. Will you have a positive bias to invest in alternative energy? And two, are any of your advisors raising the possibility of trade barriers being erected against recalcitrant nations that don't reduce their output?
Thank you for those questions. So the first one was, do we have positive screening, positive bias towards alternative energy sources? And the answer is yes. So we have both a negative screening process and a positive screening process. What that means is that we look at what it is we don't want to invest in on ethical grounds, on financial risk grounds. Then we take a portfolio and reduce it in size as a result of that. And then what we do is we say, well, we also want to have a positive impact. And by that means we're looking for companies that do good, we're looking for energy efficiency, recycling, alternative energy, as you mentioned. We're not looking to have the whole portfolio in those assets. That would struggle to pass the regulatory burdens that are there, and rightly so. But what we do have is that positive screen. And what that helps us do is capture the lessons that have occurred in the last 20 years of ethical investment in Australia. To take the last 10 years of research, for example, each and every year, those the Responsible Investment Association research has shown, and this has been backed up by a whole range of other investment banks, has shown that those funds that take account of both people and the planet, those funds that invest responsibly, outperform their mainstream alternatives. And that's already happened. Imagine all the risks that are now emerging as a result of stranded assets, as a result of the last few months of volatility in the big four banks, the volatility in iron ore prices, the volatility in coal prices. Imagine what the performance differential might be in the future. Now, past performance is no indicator of future performance. That's a caveat we always have to say in the superannuation industry. But the macroeconomics and the politics certainly seem to point to this. And that takes me to your second question, which was about the possibility of trade barriers being emerged between countries and I would argue regions who are taking action on climate change and those that aren't. And of course, this is something that could have a very material impact on our retirement savings if we're exposed to some international companies and indeed in Australia. Imagine a future where Qantas, flying into anywhere in the EU, has to pay as a result of Australia not having a carbon price. That's a future that's possible. And it will probably be the European Union that moves first on those kinds of trade barriers. We'll see what happens. I mean, obviously the Lima negotiations are coming up in a matter of days. They're leading into Paris next year. I think that we will only see these types of trade barriers emerge if we don't see progress at upcoming multilateral negotiation processes. And the feeling from many who are involved in those negotiations is to have some level of hope that things are heading in the right direction. So that maybe gives you some sense of what might happen in the future.
Can I also have a two-part question? If you have stopped working, can you be part of a future super fund if you're no longer contributing? And if fossil fuel shares are sold, somebody else is buying them. How is that impacting the company?
Yeah, great. Maybe I'll answer the first question. Tom can answer the second. The first question was about, don't worry, I had it this time. First time for everything. The question, now let's hope I remember it. The first question there was, if you're no longer contributing, if you're no longer in what's called the accumulation phase, if you're no longer working, can you invest in future super? And the answer is, it depends. So let me tell you why it depends. If you're not in the retirement phase, so a lot of people, some of our members have been, sadly retrenched from the public service. They're in their late 50s. They're not going to be entering the workforce potentially again. Maybe they will. They're not sure. Those type of people can invest. If you're in the retirement phase, which is where you're drawing down from your superannuation, then at this stage we don't have a pension option. But what we do have is a list that you can join if you're interested, if you are in that phase. That will allow you to be the first to hear when we do have that option. And to give you a sense, it's certainly something that we imagine achieving in the next 12 months. We have been very surprised, as has everybody involved in Future Super, perhaps myself less so, at the level of demand from people in the pension phase. Everybody in the industry, when you go and tell them what you're up to, says, oh, right, so you'll attract the young people who care about climate change. And I say to them, well, just remember the get-up demographic, which is which has an average age of more than 55 and is skewed significantly to a female audience. The sense that people have of 18 to 25-year-olds leading the way on concerns for climate change, yes, there's good arguments for that, but I mean, I hope no one takes this the wrong way, but look around the room, right? I mean, we've got a wonderful audience here of people who've got very substantial retirement savings, having had a very substantial working career. You want to take that second question?
Sure. Thanks, Simon. Second question was, if you divest some shares of fossil fuel companies, won't they simply be bought by someone else? And so what impact does that have on the industry? And this goes to this question of whether divestment is seen as a financial strategy from a campaigner's point of view or from a strategic point of view. Is divestment about taking capital away from the industry, or is it about taking the social license away from the industry? And you don't have to think about it very hard to realise that, yeah, absolutely, if you sell the shares, by definition, someone else has bought them, and probably they don't care so much about the risks. And one of the arguments that we find, especially not so much in Australia, but especially in America, is, well, I don't want to divest these shares because I want to engage with the company. I want to pressure the fossil fuel companies to be more responsible. Now, it's kind of a good academic question what a responsible fossil fuel company would look like. And as Bill McKibben argues, their whole business model is based on crashing the planet. So it's questionable how you can engage with them. I actually do think there's a role for engagement, but I don't think it's going to happen in the short term. I think the social license needs to be withdrawn to a point where the political risks are substantial enough that the industry starts listening to the engagement. But there are big steps afoot to start that process, and there's very, very large pension funds who are engaging relatively aggressively. I mean, I say relatively because it's a big deal for large asset managers to put pressure on their companies in this way. It's not really done. But yeah, asking them to demonstrate what would happen to your asset portfolio under a 2-degree scenario. And the answer usually is, when there's an answer at all, is it'd be in a lot of trouble. But they say, but we don't think the risks are going to happen. They're basically playing chicken with the world. And that's why divestment is important at this stage, because if the companies that you're talking about think, no, we're going to be able to crash the planet and there's nothing you're going to be able to do about it, well, we can't really negotiate from that position. Divestment sounds a lot more sensible from that position. I hope that the divestment movement grows so quickly and becomes so strong that engagement works. But at this stage, I don't think it will.
And just to very quickly add to that, and I'll just give you the context and the bias for my answer. I spent my entire working career thinking about campaigns and markets, both starting out at the New South Wales Treasury as an economist and as an accountant, and then thinking about it on that side of things, the implications for a state budget of teacher campaigning, for example, particular focus of mine there, and then obviously at GetUp. And when I take that history that I personally have and the history that comes from speaking with many other social movement activists, it allows me to make my own judgment on where we're up to. Every campaign has a narrative arc, if you like. It's got moments in time that are critical in its development. And part of why I felt, having heard Bill McKibben speak when I was on the campaign trail over at the ANU, which was the sort of moment that brought this all together for me, what I believe is that we're in a moment where we're not being taken seriously yet, and therefore, and Tom just touched on this at the end of his answer, therefore, engagement, while it's of course valuable and you don't have to have one strategy or the other, they're not mutually exclusive, you can have both, engagement will be far more successful when we've built some muscle, when we've proven that enough Australians care deeply enough to shift their superannuation. Imagine a future where you've got a person who's your neighbour, who's uncertain about climate change, doesn't really know if it's real or not, hears a lot of things, etc. But that person is your neighbour and you've divested from fossil fuels. That person's mother has divested from fossil fuels. That person's auntie and uncle and nephew have divested from fossil fuels. You're sitting there as that person thinking, is the coal industry that bad? It must be so poisonous if people are determined to do something that they think is really hard, like shifting your superannuation. Now, quick plug here, it turns out it could be done in just a few minutes right up the back of the room, and you can even start the process if you don't have your tax file number handy, which is about the only thing you need. But the reality is it has the perception of being something really challenging to switch your bank, to switch your home loan, to switch your superannuation, and therefore you wouldn't do it if you didn't care really deeply about this. And if you care deeply about it, maybe it's time I do as well. The research in political engagement constantly shows that we don't trust politicians, which we all know. Unfortunately, we don't trust scientists very much. We trust our neighbours, we trust our friends, we trust our family when it comes to developing our political consciousness. And this is what divestment can do when it comes to removing that social licence.
I wanted to tackle this issue about rates of return, high growth and rates of return. A lot of the other things that people in this room are concerned about, the privatisation of health and education services, vulture capitalism, are driven by this constant need for high rates of return. What scope do you think there is for future super to start to influence the culture in the superannuation industry and more broadly to start to address that issue?
So the question here was about vulture capitalism, our focus on growth, sometimes our focus on growth at all costs. When I think about that personally, I think the best way in which we can offer an example of what that's all about is to look at the banks. The big four banks in Australia are constantly striving to get their share price to go up. And that means that they're having to go further and further and further in searching for these returns on equity. The amazing thing about the banking sector is that the big four banks have interest rates which are higher than all the other banks almost. Certainly the regionals, certainly the mutuals, certainly many of the community-owned banks. Why is that? Because they have to. Because they've got this constant demand from shareholders to deliver more and more returns. But your question goes to the heart of, how can I say this? Let's just extend it out and to make the point. How can I be saying this, and how can I personally feel, this isn't what you're saying necessarily, I know you asked your question very respectfully, but let's draw it out. How can I start a superannuation fund as someone who believes that growth can't be never ending? How can you put those two concepts together? And I don't have a fantastic answer for you, but my own view is that it goes back to the answer I offered earlier. It's all about the stages in a social movement's development that we're at. The first thing we need to do is take funds out of the worst industries and try and get them into other industries. The next thing we do, in my view, is to actually start measuring the things that matter. So, you know, the concept of gross national happiness and wellness and well-being indexes. That's what we've got to start doing after we start removing, or alongside removing, the social licence of the very worst companies. Then in time, we're going to have a conversation 10, 20 years from now, I suspect, where we look ourselves in the eyes and look each other in the eyes and look our fund managers in the eyes and say, how are you going to look after my life savings if there's so many risks to perpetual and never-ending growth? If it's impossible to actually achieve that, how are we going to move forward? This is best demonstrated by the argument Tom offered earlier from Bill McKibben, that potentially 80% of the fossil fuel reserves that are known need to stay in the ground if we're going to limit climate change to 2 degrees. That bears out your point. How can we have never-ending growth in the fossil fuel sector if we know that 80% tips us past 2 degrees? There's a cycle then that develops from there with sea level rise, coastal infrastructure being wiped off, the railway tracks that are being built, the coal ports that are being built having been damaged by sea level rise. Wouldn't that be ironic? I mean, that's the type of, whatever the opposite of a virtuous circle is, that we're going to enter into. I think that when I thought deeply about this question, the right thing for me was to work with a team of people to launch a fossil fuel-free super fund, but not to keep our eye off the reality that is we can't have never-ending growth. And yes, I think we can in time, and we're going to have to work with academics and philosophers and fund managers and a whole range of people to think this through. Yes, we want to be a super fund, potentially the first super fund, to be part of the conversation that says, how do you look after someone's retirement savings in a future which doesn't have year-on-year returns and growth at a never-ending rate?